Hello there, welcome to my channel. In this video, I want to look at a question from the question paper of November 2024. So we are going to look at the first question on that question paper, that is our question one. So moving on to our question, we are going to start on one number, that is 1.1 answer box. So for the first part of our question, it reads dash issued. So you see that the source document for material issued is the material regularization. So other section we are saying we have material on to the second question, which is the dash budget is done to make sure that one is the required number of units of finished goods to sell. So you see that the budget that we use to make sure that there are required number of units of finished goods to sell is the sales budget. So we have the sales budget. We're going to go to the third question, the results, and then taking corrective action if necessary. So you see that when we compare budget and actual in the process of budget control. So we are saying budget control. Moving on to 1.1.4. The source document used for labor is the dash, which records the actual time that the employees are worked. So basically, this is the time sheet. Time sheets. So moving on to the next question, which is 1.1.5. This comprises all production costs except direct material and direct labor. So we know that all costs which doesn't include direct costs, they are described as indirect costs. So basically, indirect costs is a description of manufacturing over. The aim of the dash is to show the actual cash inflow compared with the actual cash outflows for the period. So remember, this is representing actual cash movements in and out of the business. And it is a cash budget that shows the actual cash inflow compared with actual cash outflows for the period. So we have got cash budget. We're moving on to the next question, which is reads, the dash is a summary of the financial projections contained in the operating and financial budget. So 1.1.7, we have the master budget. Remember, the master budget is a financial document that includes how a company will spend and how much it expects to earn. So basically, it consists of a projected income statement and a projected balance sheet. So that's what we have on master budget. So that's what we have on 1.1.7. So moving on to 1.1.8, it reads, according to Dash, the costs are collected as being produced are heterogeneous. Heterogeneous means they are not the same products. So yes, basically you're saying they are different products. So you see that the correct response that we have is product-oriented cost system, product-oriented cost system, and the product-oriented cost system identifies and accumulates all costs associated with producing a specific product. Thereby, as also we can we say is it identifies and accumulates all costs associated with producing a specific product using a cost accounting system. So basically, that's the product-oriented cost system. So we have it as the appropriate response for 1.1.8. Product-oriented cost system. We're moving on to 1.1.9. Over or under recovery of manufacturing overheads is crossed off to the dash account. Is crossed off to the dash account. So we know that After identifying whether there is an over recovery or under recovery, after we've made a comparison of the applied overheads and the actual overheads, we are supposed to transfer the balance to cost of sales. So we have cost of sales account as the correct response. So we have cost of sales. So moving on to 1.1.10 on the purchase of fixed assets. I do know that this is the capital budget. Basically, the capital budget consists of long-term capital investments. And the capital investments, we put examples of all fixed assets or non-current assets, like machinery, equipment, and other examples that we can also be fixed assets. So basically, that's what we have. So we are saying capital budget. Obviously, each maybe 2 marks to give us a total of 20 marks. So moving on to the second part, which is now 1.2. So 1.2 reads for common construction uses the percentage of completion method to determine its profit. Use the following incomplete contract account to answer the questions below. We are having a contract of BC 120, whereby we have a debit and credit sides, and then we've got additional information which reads 15% of profit or loss must be treated as a provision for latent defects. Then calculate the following. First part, adjusted profit or loss in the contract. State clearly whether your answer is profit or loss. So we are going to add the total of the debit and then the total of the credit. Then we find the difference. Then we can be able to see if it's a profit or loss. But basically, what we are saying is if you add the total of the credit, you're going to get the total is 840. It is 1,005 totals can make use if we are having the debit, which also means the opposite is true. That is, when the debit, now we're having a profit. So we can just take note of that. Then the profit or the loss now becomes the difference between the total for the debit and credit. So here you are going to get your answer as a loss. So if you subtract here, you have 5,000. 665,000, which is a loss. So we are just going to summarize that in our answer section, whereby we are going to say loss is equal to 1,840,000. And we get an answer 65,000. We then refer back to the question is saying adjusted profit or loss. So within the context of our answer being a loss, we now say of our loss, which is 665,000. And then we add it to 665,000. In other words, and then we add our 15%, which as a decimal becomes divided by 100, multiplied by 1.15. So we come here, we now say it is now equal to 600,000 times 1.15, which is in brackets, it's 115%. And then 4,750. So basically, that's what we do. And so the adjusted loss after we have included the percentage. So basically, the percentage, we are supposed to add it to 100% so that we get the total percentage, and then we multiply it by the loss, get your 764,750 runs. So basically, that's our answer. We go move on to the next question. So this provision for latent 10% of 665,000. So it's easy as it is. We are now saying 15% of 665,000, which is basically we are going to calculate it as 50% as a decimal becomes 665,000. So we have converted our 15% to a decimal to become 0.15, and then you multiply by 665,000, and then you get your answer as 99,750. 99,750 being the provision for latent defects. So Going on to the next part, which is now 1.2.3, is the contract complete or incomplete? So we are going to see that according to the information given is incomplete, and why are we saying it's incomplete is because the terminology of uncertified work. So our question is saying, is the contract complete or incomplete? And we are saying give one reason that is being said is uncertified work. So when it's uncertified work, we know that it's incomplete. So 1.2.3, 1.2.3, we come here. So we are saying, our answer is saying, we're saying it's incomplete. Because there is uncertified work. So moving on to the next part of the 1.3.1, it reads Clover Grove makes ice cream and sells them to all major supermarkets. The standard information reveals that 1 liter of milk makes 2 liter of ice cream. The standard price of the milk is 17,000 rands per liter. Then we are given 1,000 liters of ice cream were made using 800 liters of milk. Then on the required part, how many liters of milk were supposed to be used to make 1,000 liters of ice cream? So we go back and see in terms of the ratio that we are given that it results being 1, then ice cream will be 2. So basically that's the ratio to be used to make ice cream. What do we have in terms of milk? So this is just simple proportion that we are going to apply. So it's just simple proportion by saying one numerator, and what we have is 20,000. See now, if you calculate there, you see that you're going to get your answer. You're going to get your answer as 500 liters of milk. So basically, we are saying 1,000 divided by 2. So that's how we're going to summarize it in our answer section, whereby you're saying 1,000. My answer is 500. 500 liters. 500 liters of milk were used to produce the 1,000 liters of ice cream than the amount that was supposed to be used. Show all your keys. So how many more or less liters of milk were used to produce the 1,000 liters? So basically we are saying we had 800 liters of milk. So we see from 800 liters of milk, how many more liters were now supposed to be used is the question. So we are saying our ratio is 1:2. So in this sense, we are saying this is our milk, and this represents our ice cream. So basically, what we are saying, we put 1,000 here. How many liters of milk we are supposed to be used? So say what we don't have is 1, and what we have is 2. Denominator then multiplied by 1,000, which is a given figure, and then you over 1. So basically, we have what we don't have is 1 denominator, then multiply by the given figure 1,000. And we do that, you see that you're going to get used. What was supposed to be used is 500 liters, but what was used is 800. So the difference becomes the answer on how many more or less liters of milk were used to produce the 1,000 liters of ice cream. So they used more with 300, 800 minus 500, which is 300. So we come on the answer section, and we're just going to say they used more, used 300 liters, 300 liters more, 300 liters more of milk. 300 liters more of milk, which we found by saying 800. What that was used, 800 is the one that was used, and what was supposed to be used is 500. So minus 500. So basically, that's what we gave on our calculation. So that's what we have on 1.3.2. Then you go to 1.3.3. We say give one possible reason for your answer in question 1.3.2. So it means out of 800 liters, we're supposed to have more ice creams, but we got less ice creams. So this is generally inefficiencies that took place, wastages that took place. We wasted uh, in the sense that if the milk was used efficiently without wastages, we're supposed to have more liters of ice cream. So basically, the best reason is that wastage of material took place. Wastage of material. So our question just needs one reason. So we are just saying wastage of material in this case is wastage of milk. So we just say wastage of material. In brackets, we are talking about milk. Wastage of material. In this context, we are talking about milk. So we have milk in brackets. So other reasons that you can also include is use of unskilled workers. If you use unskilled workers, obviously they are not efficient in their processes, so it will affect. So this is what we have on 1.3.3. Then 1.3.4, the business actually paid 14,000 rands for the milk that they used for production. How much were they supposed to pay for the milk that they used? So we know that it's 17 rand. It's 17 rand per liter, and they used 800 liters. So it's going to be 800 times 17 rand. So basically, you say 800 times 17. 800 times 17 rand. 800 times 17 rand, and then you get your answer is 13,600 rands. So that's what we want to 3.4. So moving on to the last part of our question. So the last part of our question says, give 5 advantages of the marginal or direct cost accounting method. So the marginal costing basically, it includes all costs that vary with the level of production. And you know that the costs that vary with the level of production are variable costs. So it is basically a change in the total cost that arises when the quantity produced is increased. So remember, to get our total cost, we say variable cost plus fixed cost. So the fixed costs do not change with the level of output, but the variable do change with the level of output. So marginal costing takes into account only variable cost. So take that into account. So what advantages can we deduce from that? So we have got various advantages that we can deduce. So we come to another section and list those advantages. Remember, our question is saying 10 marks, so we can raise at least 5 points. Whereby the first advantage is that by including only costs that varies with level of production, it presents a valuable information for budgeting. Remember, we can be able to take into account realistically what is going to be on the ground as we take costs that are going to vary with the level of production. So basically, we are saying marginal costs. Well, we are saying marginal costs present valuable information for budgeting. And the second advantage, it is very simple to understand and easy to operate or easy to apply because it doesn't take all the total costs into account. Remember, we said total costs, we also include fixed costs. But in this sense, we are only taking into account the variable cost. It is simple. And we look at the next advantage is that variances are from standards are clearly identifiable. So variances. So we are saying variances are, so remember, it's a variance which is going to be different from one level of production to the other level of production. So the variances from standards will be clearly identified. So go to the next point. So the other point is information for profit planning purposes is readily available, which is now the fourth point. Remember, we 5 points. So it is also an effective tool in short-term decision making. It is an effective tool in short-term decision making. So this becomes the last advantage that we have, that it is an effective tool in short-term decision making. So basically, that becomes the last part of our question one of November 2024. So thank you for listening, and hopefully the video was helpful. Let's meet again in the next video.